Everything in this video is for general information and educational purposes only. Nothing presented constitutes financial product advice, personal advice, or a recommendation to acquire or deal in any financial products. Any examples are illustrative only and should not be relied upon as indicators of future performance, as past performance is not a reliable indicator of future performance.
In this video, we're going to be covering price action, what price action is, volume, using our long-term VWAP indicator, and time price opportunity charts, also known as market profile charts. So putting all of this together creates hypotheticals. We get lines in the sand, we know where to do business, where not to do business, where noise is, where we shouldn't be participating, and ultimately this is coming up with an idea of where we want to be taking a trade, executing, where we're wrong, and where we're going to be taking profit. So it's a really, really good way when mixing all of this together, we can come up with a really, really good picture of the potential of what's going to happen moving forward within the markets. So let's get into it. So when we talk about price action and what it is, it's the historical value of what price was doing during isolated sections of time. So that means that every single one of these candles that we can see here represents one full day of price action. If we were to change it to a 4-hour chart, we could see now that every single one of these candles would now be representing 4 hours of price action as each one of these candles print. The anatomy of these candles is an open, a close, a high where the wick is at the very top, and a low. So if we were to zoom in on this candle, we would be able to break down and see exactly what happened within inside of a lower time period, and that is giving us the historical value of where price has been, what it's done well, and what it hasn't done so well. When we're also talking about price action, we're talking about the actual market structure. We're talking about how price went up to a high, made a higher low, a higher high, a higher low, higher high, and so on. What we want to see for a healthy trend is price to continue respecting the previous higher low and not get any closes below it to maintain that strong uptrend direction. Price action also consists of things such as ranges. Finding when a higher low went into a range, and impulse moved up to its very first high, and that builds a little bit of a range. And within inside that, as we can see that there was a lot of noise that was happening around the 50% mark of that area. We can also see where buyers step back in when we get back down into the deeper discount parts, and then we can also see where they reject to hold and make any advances moving higher again before we break out below ranges. As price progresses, we can continually add onto these new ranges each time, and we can monitor to see how strength goes if we're going to remain rotational with inside the range and continue building value, or are we going to advance higher and potentially push back into a previous price range prior to it, or are we going to break out lower and continue the downtrend, which is what this current price action is showing could be a potential. But for now, while we're within inside this now developed range, we need to understand that we are just rotational within here until we get one of these breaks out above or below. So with price action, we would say using this alone at the moment would be saying that the range high would be our line in the sand, our bearish line in the sand. Everything below is bearish, this line. And above this line down here around this 80K mark, everything above is our bullish line in the sand. And we expect price just to continue to range within inside of this area until the market shows it's strong enough to advance back up and accept within the old range, or if it is so weak that it's going to continue in a downtrend and potentially take out higher time frame structure, as we just went through earlier on, looking over here at this last weekly higher low area. We can also look for areas where price should have held, such as this low through here. What we can actually see is we had a bit of a structure where we've swept below this low and reclaimed it. We've come back down and tested again within this area. So this structure here with a shift above this high, meaning that price swiped above this high, we really did not want to see price coming back down and getting a close back under this level through here. Once price did close below this level down through here, around this psychological 100K area, we can see that we got a kiss of death essentially, which is a back test to that area. And then from there, prices advanced to go a lot lower from this point moving forward here. So we can use this as a type of price action as well, that we are studying the actual price action, the structure of price within inside this daily time frame, and we'll be saying to ourselves, when price was within inside of here, we wouldn't want to see this candle come in here that closed below, which is telling us that the market's quite weak. And the confirmation was when we come back up through here, and we've obviously closed back down in this area here and prices continued lower. Another form of price action analysis is order blocks. The order blocks will be appearing all over the chart at all times, but the ones that we want to pay attention to are the ones that make the most sense. So we bring attention to this white block over through here and the current order block through here, and also this order block through here. We need to understand the story that it's telling us each time. So we know, as we just discussed earlier on, that this level through here, we didn't want to see fail. So what happened was when price came up to here, we can see that there would have been a lot of people buying at resistance, but when this next candle here closed below the low of this, it confirmed that this was now an order block with people wanting to get out. Now, the price did come back up into this area, which would have let a few out, but we still know that there's a lot of people that would have been offside, and once this move aggressively moved away from the people that got within inside of this trade, they'll be willing to get out. So moving forward from this point here, what we can do is we can put a block over the top of it like so. Being a larger body area, I'll just use the actual body. If it was a smaller area, like a candle, like what's known as a doji, where there's more wick or equal wick to body, then I'll use the entire range. The other blocks I mentioned was this one here as well. Now, we can just start with looking at how it looks with just the body. We can also look because it has a little bit more wick itself as to how it looks with the entire range. And I'm going to choose to use the range for this block here. Now, what I want to point out is when price was moving away, it did have a step in off this area down through here. It was around the 90K psychological area that we can see we're sort of around at the moment. So we're looking at the psychological level, the meaning of people who have obviously thought to themselves, I'll buy when we get to 90K. They also as well got potentially trapped offside. So you can see when price comes back up and with inside of it, people add a supply to the market breaking even, which pushes price down again. What's interesting with these order blocks is you can see that it's create a boundary now, almost like its own internal range. So looking at this order block here, we can now see that we have obviously price that's sort of in a little bit of a disagreement. So creating a little bit of indecision, if you will. So price is going to remain within inside this order block. And again, if we see price break away from it, it can tell us that the trend is shifting. If price accepts back under it for too long, it could tell us that the trend, the current local downtrend, may very well be advancing. Just clearing those order blocks, I'm just wanting to add in a couple of other order blocks that we currently have. So the down candle here would have had a lot of people assuming this low is going to go. So lots of sellers become demand because where they sold low, they want to get back in. If it was a futures market, they obviously want to break even because they're in a short position. It's now underwater against their idea. And then up here, we obviously have a lot of people that were trying to get outside of this original range that we had drawn in, which have now basically come undone. And they're also in a trap position. So you can see in between these two order blocks looking locally is now going to potentially be creating a little bit more sideways price action. So again, what we just did before was we know that the top boundary of this candle, and we can also include the body of this candle, which are quite similar in height. So we draw a line across the top of this line through here, quite similar to the body of this candle. So this still applies the same, that we would like to see a shift of condition. And when I say a shift, not really just another failed attempt of the high. This is a whole range down here, but instead we want to see price break above, retest, and then push higher to be able to confirm that the demand has outweighed the supply within this area. We can actually see from these wicks down through here, we can see that we had this order block that obviously, as we discussed before, people who sold, who wanted to get back in, who think that they made a silly mistake selling their positions, all those in the futures markets who were short in this area through here have now been able to somewhat break even and prices move back higher. But now we have this side who have obviously pushed and bought into resistance, who also want to get back out of those positions. And that is also why we're finding a little bit of supply from these wicks here. So this here is essentially a few little examples of what price action analysis is. And now we're going to move on to the next sections, which is talking about volume and talking about time, and how using all three of these concepts putting together can help us come up with a hypothetical that can help us make better trading decisions, so we don't end up like these people and we don't end up like these people here. So this is our LTVW. So what this is this is a volume-based indicator. Everything you see here is based on volume, an accumulation of an average of the past amount of volume that is aggregated across large spot exchanges. So we end up with these levels that become very, very precise instead of just staring at one ticker, one exchange, that sort of thing. We're getting an average no matter what exchange that you're trading on. Now, I use Coinbase with this. Coinbase charts are very clean. I don't trade myself on Coinbase, but I'm using this because I actually want to see that the levels that I'm interested in are actually getting hit by the greater market. Now let's take a step back. There's a lot going on this screen at the moment. So we're going to go into the settings and we're going to be removing the standard deviation bands from the previous. Now I'm going to put them back on and explain in a second, but if you're new to this, you're probably a little bit confused as to what's going on. So to begin with, we're going to be looking at developing value. So let's go through what that means. You'll see how this band is not like a straight range. It is actually moving with time. Now, unlike a lagging indicator, this indicator is actually moving forward with the current price action. We went through the price action before, we went through the different time frames. We're looking at the daily at the moment, and these are yearly VWAPs. So what does that mean? First thing is we can see that it starts developing from the January the 1st, 2025, okay? All the way up to the current date. We're nearly through the year now at the end of December. So this band has basically been developing fresh from the start of January the 1st. Moving across, we can see at the start of January 2024, all the way through to the end of 2024, where the fresh band that we were just looking at begins. So we can see this developing band moving along with price action. Nothing's lagging. We're not waiting for any crossovers. We're not waiting for any extra candle close confirmations. We have these levels that are coming in perfectly each time. So let's explain what it is. Within the middle of this is known as the VWAP, the volume weighted average price, okay? So because it's an average weight of volume, what it's doing is it's grabbing all since the start of the 1st of January, it's grabbing all of the volume and it's finding an average, and the dotted line is the absolute mean. It's the absolute average of volume, okay? And so that is this dotted line that we see right through here, this whole way through. Now you're thinking, what's the dark shaded area? Okay, so this top one through here is the value area high, and we'd call this one the developing yearly value area high. Again, we're looking at it on a yearly chart, and we're seeing that it's developing, so it's the value area high. Now, what does that mean? That means that from this dotted line to the very, very top is one standard deviation above the VWAP mean price, okay? Now, at the very, very bottom, we have what's known as the value area low, the developing yearly value area low. That is one standard deviation away again from VWAP at any point of time while this is developing. Now, what I want to show you just before we continue to move on is just how well these value area highs and value area lows can be respected as we move through price. We can see how it acts as a resistance. We can see how we can consolidate and we can compress an area before we break out. What you'll also notice with the actual VWAP itself is it can become a quite choppy area, as you can see through here. You can see when we finally get the upper hand, we're building a little bit of what I call time and space, which is this area through here and through here, where we've had price move away from it, move sideways through time. We've got the time and we've got the space that's happened in between the retests. So this can be a bit of a telltale when price is doing this, that we're getting acceptance into a premium area of volume. We can use the price action as well to see how well it's performing against trends and local trends. So we can see, using this isolated case through here, we can see that we had a shift above this price action through here before we came and tested it. So if the price didn't get above this area through here, coming back down to the VWAP, we may not have been as confident that price would have held this VWAP. But that's just a quick little show you how we start adding price action, and we're also applying the volume as well. So this is what's known as the developing, and within inside of here, we have a few rules. So if we move back over to the current yearly that's currently developing, what we can see is we've actually spent a fair bit of this year in two different states. Now, what those states are is the first state is in balance down. That means once price is no longer within inside of the developing value, it moves into a state where it struggles to get back inside that lower value area low, that negative standard deviation away from the mean. When it's inside of that state, we call it imbalance down. Imbalance down means while we're here, we just need to expect more of the same until proven otherwise. Now, opportunity obviously exists in the highest point for buying in this state, and we can talk about later on different ways of how we can look at getting into these trades and anticipating that price is going to move back within inside this band. We can then, the other thing I will now bring up is when we're above the band, we call this imbalanced up. Okay, that means we're above the 1 standard deviation mean from the VWAP, and we're above that price. So when we're above it, we need to again assume the same until we're proven otherwise. Okay, if we just jump back to this year, we can see that in 2024 we spent a fair bit of time in the developing band with inside of its range, ranging sideways. We call the state when we're inside of the band, we call this balanced, because we're balanced within the value area high, the value area low, and in this case, we expect us to remain inside of this state until a shift of condition. The shift of condition came once we had the clear breakaway from the value area high, the time and space that we just discussed, the retest of the area, and then we're able to push away and become into a imbalanced up state until the new year was formed. So we've now covered the developing band, what it is, the volume of how it's measured, the states that we can be in. Let's now move on to the next step by adding what we removed when we very first started talking about this. So we go back into the settings, we're going to be adding the previous, okay? Now when we add the previous value, what that is this means that when 2024 finished, so let's have a look here, and let me just get my tool on to draw this in. When we had the value area high, move up like so, the value area low, move like so, and the VWAP closed here, all on the 1st of January, we had a previous year value that's moved out through time as a value to keep an eye on moving forward. So we can see the same with the previous year. So when we had the developing all the way back in 2023, it became, when 2024 was developing, we were well away from it, but it was still there as an area of value and an area of interest if price were to come back down to that level. So these are strong levels moving forward. And one more little thing, when price hasn't hit an area before, we call it naked. So it's a naked value area high, a naked previous VWAP. So this would be the previous yearly VWAP. In this case, the previous yearly VWAP is this one here because it's literally the previous yearly. In this one here, it would be the 2023 previous yearly value area high VWAP and so on. So that's a little bit of the language and the acronyms and that sort of thing you'll hear when it comes to talking about the VWAP. So this box through here, just again, I'm just going to I'm going to open up these settings, and what I'm going to do is I'm just going to remove and toggle the developing, just so you can see that these boxes are basically, so this what we have here at the moment is this is the 2024. We add that back on. We can see how the band, when it finishes going into it, we have the previous. So let's just say that the year is actually going to close off moving forward from here, and I'll just draw it all in again. What will happen is for the previous year would be that if we're going to close off here, this would be the previous year value area high, the previous year value area low, and the previous year VWAP moving forward. So that's how that box would look, and then a fresh developing 2026 value area. That's not a static like this, but a dynamic moving band will start waving through time, and we can use both of these. Now, something else. Generally, the previous year or the previous month or quarter or whatever the VWAP time frame you're measuring will be is a stronger level to go off. That is because being a developing, it's a little bit more washy. Okay, so we sort of use the developing more in terms of, are we rotational? Are we imbalanced up? Are we imbalanced down? But when it does come to these previous years, such as the previous year value area high, this is the kind of reaction that we want to see. And now we can say, okay, we found some strength again off last year's value. We've got some time and space in here. We haven't taken out the April low price action, meaning that we're still in a macro uptrend. So we can't really be in a bear market at this point. It can smell like a bear market, but until it actually confirms taking out this low, accepting the last year as the last previous year's value, we need to assume that price can still continue going higher, and we've just become into a rotational state within the currently developing year. So we can see with this at the moment, we can see that price is trying to become balanced again. It's trying to fight off that imbalanced down state. Now, again, a refresher, the imbalanced down state, when it does happen, can end up staying under for quite a long time and struggling to get back in. So what we don't really want to see as an imbalanced down state, which would essentially make us accept into this previous year value area. If we accept within inside this area, then we can assume that we're in a bear market. The low goes, and then we move a lot lower and we spend a lot more time because we are then rotational. We're balanced with inside the older previous year VWAP. Okay, so it goes back to the 2024 VWAP that we're now going to rotate, and we have to deal with being inside of here. We have to deal with checking the prices, accepting the prices, and then obviously finding strength to move back up again eventually to an imbalanced up state. But at the moment, we are in balanced up against the previous year value area high, and we are somewhat trying to accept a balanced state within the 2025 developing VWAP. But it's quite choppy. We could fall out of it, but once we see some strength pushing back up in here, we can say that we gave a big tick to checking last year's value. It's the second time we've done it this year as well, so not a naked level, so not the strongest idea. So for those who are quite conservative, they'd say, hang on, I'm not too sure about this, because we very easily could fall back out of it and then test this actual low for a swing fail pattern, a price action type of analysis to see if there's demand that exists underneath the April low. But for now, we need to give it the benefit of the doubt of seeing what is, and we can build hypotheticals based off that. And at the moment, it's basically saying that we have found strength basically around this 80K level, which comes in around the previous year value area high, and we need to see if we can get balanced for some trades moving back towards that 100K and that developing yearly VWAP, which just so happened to line up quite nicely together as a point of supply, a point of resistance. Now, if that didn't break your brain enough, this here is a 4-window setup of the LTVW. So what makes this different? We went through this top left quadrant up through here. So we have the daily, and that was the yearly values. On the right-hand side, we have the quarterly values. So every 4 months, we're getting the new band, and we're getting the previous band of the quarter before. So it'll be quarter 1, quarter 2, quarter 3. So we'll be looking at the quarter 3 value area high and the quarter 4s developing, etc. So the top right hand side, 12 hours, is the quarterly. The bottom right hand side down through here is a 4-hour chart, but we're looking at the monthly. So again, every single time we have a previous month, and then the month before that, we just give it the actual month date. But as you can see with inside here, we have a lot more boxes and a lot more of these bands that end up becoming boxes. So we can start to move further and further and further down. So instead of waiting for a higher time frame confirmation, we can go, how well is the higher time frame doing? Where do we sit in respect of the higher? So the higher time frames are basically the heavier levels to get through and to accept above, but we can start to look at earlier signs. And I said this earlier on, I said, how could we anticipate becoming a rebalanced in a yearly value area? Well, we can look at the lower, we start to take out lines in the sand on lower levels. We can say the monthly has just reclaimed a previous month value area high and it's looking strong. Or, we could say that the developing quarterly has reaccepted and it's now balanced, but we might not yet be on the yearly, etc. So just different little scenarios where we can start to go down through these different time frames and start to build a picture of strength and that sort of thing. Now, obviously, we're breaking the time frame down as well. So as I said, top left's the daily, and then we've got the yearly. The top right, we've got the 12-hour, we've got the quarterly. The bottom right's the 4-hour, the monthly. And then to the bottom left, we have the 30 minutes, which aligns with something we'll go into soon, which is time, priced opportunity, market profile charts, which is time. So I'm a big fan of the 30 minutes, especially for intraday trading. But we also have down here as well, we have the exact same thing going on. We have a weekly. So we're looking at the weekly. So every single 7 days, we're having the band and we're having the previous levels coming through. So again, we can look at that more on a sort of a scalper / intraday trader, but we can still monitor that to what the strength's doing on that lower time frame, flowing into the monthly, flowing into the quarterly, flowing into the yearly. But of course, there will be times where the yearly might still be looking pretty good, and we're not really looking at that because we're balanced in there. So we know that we're still balanced. We know we're nearer an area that we should be looking at that higher time frame. But we could say, well, the quarterly needs to reclaim a value area low of some sort, but we're using the weekly and the monthly to see that strength happening, which is saying, hey, if we get in here, we can still get our stops, into profit. We can still be invalidated with a decent profit. But it's far away enough to not be sort of buying straight into resistance, so to speak. So that's why we have these 4 windows set up. Everything I just said about the daily, we could go back through each time on the quarterly, on the monthly, on the weekly, but we're just using all of these levels combined each time. So we go down to the weekly, for instance, we can have a look at the previous week, which we are balanced within at the moment. So the indicator will show that the previous week value area high, the previous week value area low, and the previous week VWAP. We can see that we're balanced with inside it. We can see that we've opened up a fresh week pretty much in the middle, but in respect of the week before this developing, we have the week before that. So week before value area high, week before value area low, week before VWAP. So you can see how it can start getting messy. And this is also areas that create chop and create these high volatile movements of swings and stuff that people go, what is this price action? Well, we can actually use this to say, okay, well, there's a confusing level here and a confusing level there. And that might be enough just to say, I'm going to step aside and wait for a level where the week before last and the previous week gets swept. Super clean, away from all the noise, away from all the mess. Now you can see that at the moment, the previous week VWAP is the area that wanted to buy back up. We can see that a lot of strengths come back in through here. We can see the week before last value area high. If we extended that through time, we can see that that's now adding a bit of supply to this point through here. We are currently balanced within the at the moment within the developing weekly that's going on through here. And we've just started the week as well. So we'll see how this forms, but we know that the previous, like I mentioned earlier, the previous levels are the more important ones. The developing is just giving us an idea of, how we're going with these sorts of things. So we can pretty much see that we were imbalanced down for a small period of time, but how strong the bull stepped in to become balanced again at the moment. But we have resistance points here, here, and here on the weekly. Now you can say, which point do I look at? Well, that's where we could come across to the monthly over here and go, if we put the crosshairs on, top left up through here, we could say, where does the developing monthly line up at the moment? Well, it lines up perfectly with the previous week. We've got time and space of the developing monthly VWAP. So there is a chance that we could push up to this developing monthly value area high for intraday traders. They could find a point to be able to enter and exit at this point, which will add to that supply of those sort of localized time frame traders. But we can just see that we can line up all of these levels, and this is adding the volume. So the price action, a few things that we went through before, we can be looking at the order blocks, we can be looking at the shift, we can be looking at the structure, we can be looking at the ranges. Then we're adding the volume component on top. And you can see now that we've got the volume and price action, and putting them together can give us a little bit of direction. It becomes like a bit of a compass. It tells us, I only want to participate at this level. I'm going to set an alert. So let's just say that we said, we look at down at this previous month down through here, developing weekly down through here. It comes in down around through this area through here. So developing monthly value area low, we might sweep here first. It might not be worth taking the trade, but I'll say, okay, if we get back down to not last week, it'll probably sweep it anyway, but I want to know a little bit beforehand how it looks, how the price action looks, how the flows are looking. I'll right click and I'll say, from here, I want to add an alert, and I'll go create. And now I go live my life. Now I go and do other things. Now I'm not sitting around staring at a chart all day, scared that I'm going to miss a big move, getting in and out of trades that I'm constantly losing money off because I'm literally just becoming a part of the chop and becoming a part of the liquidity for for algorithms and that sort of thing to take money off me. So now we're going to be moving into a next section, which is our time, to add that into sort of the ingredients to create these confluences that lead to hypotheticals. So the next section we're talking about here is time. Now I wanted to start with this chart, okay, and it's just 30 minutes. It's candlesticks, okay. Nothing too complicated to get your head around. Okay, a lot of people kind of get scared when they look at this kind of stuff, but it's actually really, really useful to look at time. Now, the reason why we look at time is time essentially is acceptance, okay? With time as well, we can see where price has spent a lot of significant time within certain ranges, within certain, something we're going to move into called composites. And just gives us a really clean area to sort of read a narrative of what the market's been doing, how well it's doing, what it's trying to do, if it's doing well, if it's not. It leaves behind different things like discrepancies as well, telling us where, a low it didn't have a lot of conviction, or a high had a lot of conviction, which can lead to a larger sell-off. And where there's inefficient price action, meaning that was only sort of one-way trading through an area. Whereas with the two-way trading, when we have participants on both sides testing levels, they're able to actually confirm if it's valued at that amount of money at that certain price point. So that's sort of what an inefficiency is. So without sort of rattling on this, I'm going to add something called a time-priced opportunity chart, or also known as a market profile. So I add this over the top now, you're straight away going to think to yourself, what is going on? What are all of these blocks? What I want to do is just zoom in on previous day. Okay, so the previous day is this box that's being formed through here. And if I right click on this box and I just go expand the clusters, it now just sits pretty much straight over the top of this 30-minute time frame chart. So we remove these candles because we're not really looking at it on a time base. We don't really need to see exactly what the 30 minutes was doing, where they were, what they were doing with inside of that. We can go look at TradingView or something like that for that. And we're just going to avoid them. We're now just breaking up that each individual ones of these areas through here are now time priced opportunity market profiles made up of these blocks. Okay, so with these blocks, it's just telling us where there's time, and when we actually bring it back together again, it's giving us the shape of a profile. Now, in the course, we go through what all these profile shapes are and all this, that, the other. I'm not going through that today, but I just wanted to go through basically some really good ways that we can actually use this, and then bring levels over to TradingView and apply it with the LTVW, which is the volumes. We've got the price action, the volume, and we've also got the time. Okay. So what I want to bring up for the first thing is, like the LTVW, is we have a value area high, we have a value area low, and we have a point of control. Now, I have these blue points of control. That is the only bits of volume that I actually have on this chart. The blue ones are still based on volume, how much volume was transacted. But generally a TPO chart, a traditional one, will not have volume. It will have what's known as a time-based point of control. Now, point of control is similar to our previous week, our previous month VWAP, okay? In this case, it's the previous day. And so the point of control, VWAP, they're quite similar. So the time point of control is where throughout yesterday, price spent the most time, and that was actually at 90,168, going off, what you're looking at here. Now, that's why it's extended through time through here. The value area high and the value area low, they're actually calculated based off a time measurement, rather than based off a volume measurement, which we sort of get with the previous day, previous week, previous month, etc., value area high and value area low. So straight away, you can see that there's going to be a discrepancy. Now, when they line up on a chart, and you have a previous volume and a previous time, it's showing it's a stronger level than normal. When they don't quite line up together, it's saying there could be a little bit of a leeway between that area. Something that's quite interesting generally to go off is if we have a volume point of control that moves with a trend or is situated somewhat within a profile, generally that acts as a little bit of a magnet. Now, we don't have to go back to it, but generally it's saying that this area here had more volume. It had more interactions. It can have more buyers, it can have more sellers. Generally, it's going to be more of a magnet on the chart. When we open within the day before, we're balanced. Just like we opened within the previous week's value area, we're balanced. Until we're imbalanced up above, we remain to believe that we're going to stay inside this value area high and value area low until we're proven wrong. We have the time-based profile through here, and price can move towards that and obviously reject. However, volume is generally a lot stronger of a level. So if price were to come down and bounce off here, I believe it would be a lot stronger to move towards this high. But while we've just opened in the middle, it's a little bit of a no business zone for me. So why I bring that up for an example on this day was the time profile was here. The volume profile was here. We didn't make much advancements above the volume because the majority of the volume was traded here, and we continued to go lower. And other times would be where price is built out, it's pushed away, it spent a large amount of time at the top, it opens up a new day. There's a high chance from here that we will see ourselves come back down to the volume point of control. Why? Because we want to see volume move with a trend. So it's a little bit of a telltale that we want to see volume whenever a move is happening. We want to see that volume be lifted up to the point of consolidation for continuation. Otherwise, generally, it can just be perpetuals undoing and that sort of thing, where prices just got squeezed up to a point, spent a little bit of time or more time than the remaining of the profile, but the true business was done further down. So this is sort of some little things that we'll be looking for each time that we're looking at these profiles. And this is sort of the discrepancies. These are the anomalies that we're sort of looking at when it comes to price. Something else great about the market profile is we can look where price has moved away from an area and we can actually start to merge values together. So if I'm merging this value into this value because it was within inside of the entire amount of dark shaded area, the 70% of value in this case, then I can merge it in. I can then do the same for the next day. Was there at least 50% of value within inside the 2-day composite we now have? Yes, there was. I'll merge it in. And so on and so forth. Was there? Yes, there was. So I'll merge it in. So now that I've merged these in, if I put a rectangle over it, this is just a little bit of a drawing tip, I'll put that in over the top. And what I'm going to do as well is I'm going to take note, thinking to myself, at the moment, where is the volume and time mostly spent? It's spent a lot lower down through this 89,213 areas where the volume is, 89,473. So we're sort of within inside of this area. We're still balanced rotation. We can go higher, it can go lower. But generally, I would say that the real draw coming in at the moment would be to move down lower and to test this area. Now, if we do expand it out though, we can see, is there any progress? Well, yes, there's a volume point of control here as well, which could interrupt the flow to go down there. But nonetheless, I'm seeing the 3 points of control versus this 1 point of control, and then this bit of a rejection above the high. And from here as well, I can also see that over in this point, we actually had these single prints. So generally that's where the market hasn't had enough time to do two-way trading to agree if it's actually worth that amount within inside of that area. We've retested that area from there. We've pushed up as well, and we've failed. There's a lack of conviction because generally we want to see 3 of these squares above or 3 squares below or more. That's basically saying a sell tail at the top or a buy tail at the bottom, which is conviction. So there's not a lot of conviction to sell, but we are rotational. So at the moment, with inside this boundary through here is where I'm just going to be looking at time to see, is there acceptance moving forward above this area? Is there acceptance below the area, etc., for us to move higher or lower? All I know is locally, looking at this price structure, there's a 4-day composite and we're rotational with inside of that composite. Now we have this little bit of a 2-day at the top up through here as well. So I just want to add that in as well. Just looking, these are just daily. You can do this on the week. We can do it on the monthly. I don't want this video going too long. We can even break it down to sessions, which I can click across in a second and just show you what that looks like. But we'll be, again, like the LTVW, we're using all of them. We're treating the higher time frames as more of the higher rejection, higher acceptance points. But at the moment, we can see what was the reason that yesterday we actually rejected from this high. Well, we had the 2-day and we didn't accept back within inside the 2 days. So because we haven't accepted, what have we done since then? We've gone back into the 4-day and we've had a little bit of a rejection on this 4th day, creating the profile. We can see now that we have this bit of time and space rejection saying, yes, we are balanced. We do have a higher chance of rotating back down towards, this 4-day point of control, where we can see just visually where most of these volume and time points of control are sort of adding up at the moment. So if just doing this by itself, this is too much to kind of be staring at all the time and looking at and trying to understand, what we can do is we can get the values as well. So we go over to TradingView and we add in 91,230 and we add in the value area low of the 4-day composite to 88,825. Then we can see how it sort of starts lining up with the price action. We can see how it lines up the LTVW. So let's go and do that now. And I'm just going to add these levels in now, okay? So what I've got is the 4-day value area high, the 4-day value area low, as I just mentioned. I also added the 4-day naked point of control because it hasn't been tapped because it's 4 days worth, which is down at that 89,115 level. And I also added the 2-day value area low just to have a little bit of a look at how bringing these levels over based on time can create these really clean levels for you to trade off. So we have a look at here. A body on the 30-minute, just keeping it on the 30-minute as well at the moment, just so you can see, because it's sort of what we're looking at with the TPO, the bodies weren't even able to close and accept into that 2-day. So let's have a look. We had these bodies that didn't even close, and we had this really clean kiss to reject before it rolled over from there. A little bit more choppy and messy through the through this 4-day. We can see over here, bodies didn't even close over. We had an order block come through here. We had a little bit of an attempt to buy back off this, it probably wasn't a 4-day at the time, but nonetheless, the 3-day would have been very similar. 3-day was probably a bit lower, so it would have been even more accurate then as well, because we update these levels as we need to. We can see that this 4-day through here, we've got this little bit of a rejection going through here. We can see where it tried to accept above the 4-day and fell back in. We've got this 4-day endpoint that now hasn't been tapped, but if we did a 3-day, it could be a little bit lower or a little bit higher. And now we have this 4-day value area low, which is confluent with this low over through here. So we do come back down to this area. So now that I'm looking at the price action, I'm looking at the time. That what I can also then do is start to add on the LTVW and see, is anything with more volume than just a volume point of control, is it anything worth our time to actually start to have a little bit of a look at? So I've added the weekly over the top. So what I do want to have bring clear to what the process of all of this was now. There is a little bit of discrepancies. Obviously, we have a higher previous week. The volume is higher. We have the time is a little bit lower at the moment looking at the weekly. But what we do is the week before last value area high lines up perfectly with this 4-day value area high that's coming through here. So we've got the time, we've got the volume. So we know moving forward that a strong line in the sand is to actually get above 91,230 if we want to see progress up to this area up through here. Now, because we've already given it a good, clean, hard test, what I'd say is this previous week value area high would be a point that if we reject, I would want to see essentially a rejection, a reclaim of this area, and then a push higher to confirm that we're accepted within the 2-day. And so this is something to look at, that instead of just blindly, fading a previous week value area high, we know that this 2-day through here is quite important. And then other targets to go from would be if it wants to come and test this 4-day and create, a little bit of consolidation between here, a bit of compression, it could as well. So I'm adding these time levels. I've got these volume levels. And then from there, I'm able to come up with these hypotheticals. I can reach my targets further. I can be more cautious to maybe not just blindly fade one area, but wait for it to lose this area. And then have some sort of, take profit points moving forward. We can see that we had this imbalanced upstate yesterday on this on this developing value area high, and we can see that this was the kiss of death, which finally confirmed that we were rebalanced, and we went straight into an imbalanced down state from there. So you can see how it all starts to play, that if this then that, if this then that goes on forward. So we jump out of here now, we can start to have a little bit of a look at other levels as well. So we know we discussed earlier, developing monthly value area high pretty much at the moment is the same as the previous week value area high. So we've got that sort of double confluence point that comes up down through that area in there. We can also look at the moment, is there anything that really, we're just looking at that composite, is there anything that really applies within inside of this area at the moment? No, there's not. So we can just continue to move on each time. We can say, okay, so we know that we've got these two levels through here, developing quarterly value area high. Okay, so we know that getting inside of the 2-day value area high, 2-day value area, and accepting within inside of that could open us up to becoming rebalanced within developing quarterly, which opens up this entire area for trading. But while we're under it, we need to be aware that we're in an imbalanced down state. So we could easily reject and continue this local trend lower. Again, we can then jump over to the yearly and have a little bit of a look there. So we have the developing yearly value area low that is confluent perfectly, pretty much perfectly, with the 4-day value area low that we're talking about. So we know that if we do come back down and we get another test, or we reclaim that area, we're not just reclaiming the 4 days of value that'll happen today, it could be 5 days tomorrow, but we've got the time that's confluent with the volume, and then we can go into those lower time frames and look at, the structure, the order blocks, the shifts of condition, the local trends, the high highs, the higher lows, the little internal ranges, etc. We can put it all together. We're getting all of these nice clean levels that we can play ping pong between. We can say, oh, we just took that level out. That was a big line in the sand. Therefore, I'm very bullish, as I said before, against, say, rotating towards a developing quarterly VWAP. But at the moment, we need to be cautious of A, B, and C. These are the lines in the sand. This is the places I do want to do business. We can look at and look historically across the TPO. We can look historically across price action. We're like, this has been choppy here. It's been choppy here. It's highly volatile through here. You could say, in this case, you could say, I would rather wait for it to come back down and get a clean acceptance back within inside of this area before I'm even looking at a potential to move higher. Or you could say, you know what, I would actually just rather wait until we get above the previous week, build some value up in this area up through here, and then potentially take a trade. Why? Because the previous week would be above the developing monthly, which would be a good sign that we're accepting the developing quarterly value area low, which opens up all that space above. Just before I conclude the stream, there are multiple types of market profiles. This one here is set up so it's going off New York close, Asia, London. Okay, so I'm able to actually, better for intraday, once I get the idea of where we're trading, especially we're balanced across the board, so therefore I'm not shooting for moonshots of all-time highs or expecting the arse to drop out of whatever I'm trading. Instead, I can just go in here and I can say, where did we open in respect to the close session? Where did the close session open in respect to the New York? So you can see the close session in this case basically open right on the high volume area of the volume point of control. It's pushed up, it's put a poor high in because there's not a sell tail, therefore there's reason to go higher. At the same time, we did open balanced within side of the close session, so I need to respect that it's within the value area high and the value area low. We're just hitting the value area low at the moment, which we're selling into, so responsive buyers could step in from this point to come and take out this high up through here, for instance. But I'm able to do this on an even smaller scale and do those internal trades where I might do 1 trade a day, 2, 5 trades a day, because I'm not in a position to be looking for a swing trade. I'm not in a position to believe that it's going to be able to go higher, or I may think it could be going higher, but I believe there's a lot of mess and chop to go before that. So that market hasn't shown its hand to say, take a swing trade, but it said, instead of waiting around for the next 3 weeks, you can take some little trades within inside of that. So that's just a quick little video on price action, our volume indicator, the LTVW, and looking at market profile, bringing it all together on a trading view chart, having some levels, some intraday levels, and having some lines in the sand, knowing where we're bearish to bullish. And then obviously this is a good way that the market can eventually show its hand. We've read the narrative. We can then say, this looks like a place that I now want to participate. It's a good discount. It could offer a swing trade because of A, B, and C. And then the if this, then that comes to the point of we've reclaimed this level. I'm going to take the trade. My invalidation's below the level, below that low that went in, because it should be going up from now. And on the way up, these are going to be the troubled areas. So from there, I'm going to be taking off a percentage of my trade as we move higher. If I don't have that full conviction and confidence that it is going to be a swing trade, but nonetheless, I can leave a large chunk of the actual trade on. And if it does turn into a swing trade, then I'll get a nice payday over the weeks to months to come. Thanks for watching.